Welcome to the end of day review for Friday, the 15th of December 2023. Starting off with the economic calendar, as you can see, there's pretty much a big PMI news release day, both for the British pound and the US dollar. If we look at the results for the London session, they were quite mixed between the GBP and USD, with one being negative and one being positive, and this was largely the same for the USD, with services being positive and manufacturing being negative. In addition to that, we have Empire State Empire State Manufacturing Index, which which essentially was negative. So perhaps there was a bigger argument to support shorts than longs. Longs over shorts, especially at 3:30 p.m. the news release. But yeah, I think maybe the thing to take into account when doing this end of day review is the fact for the New York session, the first news release was Empire State at 3:30, and that was negative. What this would mean is that it would probably invalidate short trades on GU and validate long trades. However, then that's the first news release for the session, and then after this news release, approximately approximately an hour and 15 minutes later, we get PMI news, which is mixed. So the results weren't conclusive, but the first news release during the New York session indicates that you should actually long GU rather than short GU, and thus it would lead you to managing your positions and potentially closing them, which I'll go into soon, but it's just a factor that you should take into account when doing this end of day review. Jumping into the chart, specifically the daily, we are still in this confirmed bullish trend, and on Thursday, which was yesterday at the time, we did actually body break and validate the ERL continuation momentum phase. Coming into Friday would potentially be the fifth consecutive bullish day, and this is often unlikely to happen, in which case the daily candle bias is certainly too short. However, given that we are operating in ERL continuation momentum scenarios, we can both long and short, and the shorts are validated purely by the fact that the daily indicates that we should have an exhaustion day. Moving on to the 4-hour, there isn't much to report here at the time. Starting at the London session, we were in this range, and then the day pretty much ended right here. And yeah, it's like I said, the news wasn't conclusive to tell you to actually hold on to your shorts for majority of the day. Also, the other thing to note is by the time this candle closed, we pretty much already moved our daily range. So, keeping the trade open anymore, you'd have to have taken partials and broken even, and then be convinced that price is going to go lower. And like I said, the news release wasn't really advocating for this. So that's essentially the 4-hour. Moving on to perhaps to start on the 30-minute, there is one thing I did want to indicate. So on the 30-minute, as you can see, we have this the pro trend leg like on the 5 and 15-minute. However, on the 30-minute, we don't actually have a change of character to validate that new ERL reversal phase. On the 30-minute, the pro trend leg remains at play. However, what we do need to do is ensure we always take into account the latest information that is backed by the 4-hour narrative. So if we move on to the 15-minute, essentially, now that we understand that we have scope for shorts under the ERL reversal, the 15-minute validates ERL's reversal primary leg through the failure of this chalk level. The other thing I do want to point out is the fact that the pro trend OB support for primary pro trend legs wasn't actually tapped. If you look here, you can see it's not tapped, and this essentially tells us that the only direction to trade until we have further evidence to support longs, is actually to short under this ERL reversal primary leg. We have a fib in place, we also have liquidity in the leg, and thus we had good areas to consider shorting from. In terms of the shorts, we had an option to potentially short from this POI right here. However, there isn't really liquidity in the leg, and it just made sense to position ourselves like this at the time. We had a better fib alignment. Remember, also in the London session, you probably don't want to use the 50% level, but at least the 38.2 or higher. The other thing to consider was the fact that we had reasons to trade both directions, and if reasonable, it's best to cover the highs and lows of the days, rather than actually taking losses by using smaller stop losses at the 11% levels. Having said all this, I did get into this short. I think the other aspect to note is in the morning, this bit of PA was still to print, so your fib level would have been something like this, and this level did actually serve as liquidity in the leg at the time. If we look at here, I just want to highlight this. If we look at that, we come down, this is liquidity in the leg, and then we come up and down, up, down. Actually, if we consider this carefully, what we can see is this isn't actually liquidity in the leg right here, because in order to validate the liquidity in the leg as this level, we'd need a body break of this, which was only validated in the London session, which then meant there wasn't actually any trades valid until this actual body break in the London session open. In terms of where the lull started, just to indicate this would have been at 1 p.m. So this POI was already valid. There was no reason to believe that a new leg was forming, neither on the 15 or the 5, which we'll jump into soon. So I did actually take this entry and I closed it out at around 3R, when we actually had this Empire State News release. Because of its negative values, it just made sense that it was telling us to rather long than short, and I didn't want to trade against the news, especially not on a Friday. So it would be good practice to close. The other option would have been to partial and hold on, but like I said, you'd have to be convinced that you're actually going to go lower, and the news release, the mixed news results, were certainly not convincing, neither from a GBP perspective and certainly not from a New York perspective at 3:30. So there wasn't any other opportunities that I could identify. Like I said, by the time this news was released, it was already we already likely already took out the daily range, so trying to shorts again was just not logical. On the 5-minute, what I do want to show you is also on the 5-minute the fact that we don't actually have support for a new primary leg. Had we actually had new support for a proton primary leg, we'd have considered longs and the short would have been invalidated. That's essentially the end of day review for Friday, the 15th of December 2023.